One of Kitco's favorite traders, Phil Streible, is back. He is the chief market strategist at Blue Line Futures. Phil, welcome back to the show. Happy holiday season to you. We're going to get your outlook for 2023, so let's just jump right into it. Give us your top trades for the year.
Well, my top trades for the year, it's so easy for me to come out and just say that gold's going to $2,500, silver's going to $100, copper $5, platinum $2,000. Buy it, set it, forget it. It's going to happen.
Okay. Well, that concludes our interview. Thanks for watching, guys.
Nice knowing you guys.
Okay,
in all seriousness, you look at it and you look like kind of where we've been. A lot of things took some different twists and turns throughout the year, especially since 2020 with COVID. No one thought that silver would dip down to $11, then shoot up, have a silver squeeze at 35. No one prepared for the Russia-Ukraine conflict that shot prices up. And it's really difficult to come out with a year outlook. What we do know is we look at it like a roadmap and everything. And we do know that some big developments are going to occur, and it's going to be just after first quarter of the year. So I think that, when you get the Fed and they finish their tightening cycle, you're going to see a lot of asset classes bottom. Typically from that last interest rate hike, if you forward out 12 months and you look back at history of all the different rate hike cycles, you see that the S&P 500 averages about 14% over the course of the year. So I do like U.S. equities once the Fed gets past that rate hike. You look at going farther out, what will end up happening? This is going to drag on this recession. The economy is not going to stimulate as much as what we would like, and the Fed will start to pivot dovish. That's when you see really in that second half of the year, if gold does correct, I think that's where you go long on the long front for that year-end rally on gold. So I think there's kind of two parts, the equities on the early part of it, and then your precious metals on the back end.
Interesting. So you think the equities will do better in the first half of the year? Is that because we've had too much of a correction already and we're due for a rebound? Or something else?
I think that we'll start getting to the point where everything's kind of factored in. You'll have that profit cycle, that liquidity squeeze will occur. Even assets like I've been known to say Bitcoin's going to zero. The reality is that it'll catch up on another reflationary type trade. You're going to have 3 or 4 more quarters where you're going to have some problems here. You'll have stagflation come around, and it's going to be a lot of volatility in the market. It's really tough to pick out specifically what is going to work out in 2023. So we have to look at a lot of different historical things. I like the way we're finishing 2022 with the precious metals. Everything looks really good. You've got silver has recaptured and is now profitable on the year. It's up about 2%. Gold is about unchanged. You look at platinum's up about 6%. Where is the dollar index? Because of the inverse correlation, the dollar is up 8%. Of course, and also Treasury yields are up significantly. That's why you have some of these metals are lagging. I really think that once you get past these next Fed tightening cycles, that's when the tables turn. And inflation, although it remains at an elevated level, and a lot of these different products do, I think that they take that next leg higher.
Okay, so let's talk about that. The next Fed tightening cycle. How many more rate hikes do you think we'll get next year, Phil? Like you've talked about, inflation's been coming down. The Fed's looking at that data, 6 months in a row of consecutive CPI decline month after month. They're probably seeing that as a trend, and they're probably thinking to themselves, there's no more need to raise rates as aggressively as they have been. In fact, the last hike was only 50 basis points, not 75. So how likely is it that we'll see not a pivot per se, but just stop rate hiking rates next year?
It's probably going to be in May when they stop. It'll be a quarter basis point. I think we'll get to 5.25. Powell, it really depends on, it almost seems like how much political pressure he gets and what type of mood is he in. How is his demeanor coming into these press conferences? Is he the guy who comes out and says, I don't want to over tighten, we're going to take it meeting by meeting? Or is he the guy who says, we got to get in front of this thing. We need to stop this at all costs. We are going to hit these mandates, these 2% mandates, and they're going to go full throttle on it. I think that'll start to get some political backlash if you do get sustained corrections in U.S. equities. But again, historically they tend to stop going down past that last rate hike, which our models show right around May.
It's interesting. It's important to know that even if they do stop around May, rates are still elevated by standards that they've set for almost a decade, which is zero. And so businesses still have to adapt to 4 to 5% interest rates. That's just a Fed funds rate. Individual business could have higher lending rates depending on what their contract is. But anyway, the point is they're not pivoting anytime soon. And so will businesses survive this economic downturn coupled with this sustained higher inflationary environment?
Yeah, well, that's why I think that retail sales coming up in this holiday season, I mean, we all know we've been out there. It's not even close to as packed as in previous years, especially when, equities had that upward trajectory and peaked last November and then early into the year. So you're going to see this profit cycle is really going to compress. The consumer is really going to hunker down. You can already see the housing market has been completely crippled. The worst performing commodity year to date is lumber. It's down about 50%. You've got also bonds, 30-year notes, 10-year notes. They're all down significantly. The markets do like to front run these. That's why I do believe that, gold is going to be a good play in the second half. I think copper will make a comeback. It has been doing quite well. A lot of that hinges on China, whether or not they, reinstitute COVID restrictions, things like that. Lord knows we're all past that, but it seems like they keep to hang on to it. Will the EV really take over the craze? Will the electrification of the power grid? So that's your copper, that's your platinum, that's your silver. I still think silver, and I've said this, it's banging my head on the wall, is that it's the most undervalued of all the metals. And I really do think those corrections are getting shallower and shallower. And I wouldn't be surprised to see that $35 silver next year.
$35 silver next year. I'm going to come back to that. But first, let's finish up on gold. So you said that markets like to front run expectations or at least economic data. So what exactly have the gold markets been signaling over the last 3 months? Recall that it bottomed sometime in late September, and gold basically went in a straight line from mid to late November up until now, which is above or right about $1,800. It went from $1,638 around the $1,600 mark all the way to $1,800 in a relatively short amount of time. What's that signaling, Phil?
That was really your peak dollar. I mean, if you look at it corresponds, that was the top of the dollar. That was the bottom on the gold market. That was also when you could see that there is some end in sight on the Federal Reserve raising rates. You can also see that that's when peak CPI occurred. So all these things are going to come down. Your gold's going to hang out. And I think really it's going to start to continue to move up gradually. I don't think we're going to see these steep corrections. I don't think we'll see gold, below 1,600 in the next year. I think realistically, a 1950 to 2000 could easily be achieved. Some of these, there are so many wild cards that are involved. Like I said, what if Russia ramps up in February again? 1 year from prior before? What if the Fed inflation starts going back higher because of the fact that, you get these food costs, you get these weather incidents like what we're seeing right this second, you're going to see that. I was hearing that live cattle costs, each cow was going to cost $50 more because of the strain that it just occurred from the negative temperatures. So it's a lot of it. Will the winter wheat crop, will that be decimated? Will there be problems down in South America? These are food costs they can't control. And I believe that OPEC is really operating on their own, their own guidelines right now. And I think that oil price is going to remain elevated. So you could see some of these CPI inputs come back in, back higher.
You're like an economic leading indicator. You're always projecting what I'm about to ask you next. So we will touch on energy. That's a great point. But let's come back to silver. $35 silver call. What does that imply for gold, first of all? If silver's going to 35, what's gold going to?
I could see like a 1950 gold. I know. The hilarious thing is that I'm going to say in this interview that I think $35 on silver. I think that's like an achievable, attainable target based upon what we're doing. I'm not talking about the price of a silver eagle, which is a unique item,
sure,
which is a specific like a Michael Jordan baseball card. That thing could trade at $80. That thing could trade at $100. It's a very unique item. We're talking about bulk silver here. $35 an ounce, I think, is realistic. given the fact that the dynamics of the economy are going to slow down. You're not going to go out and be buying more iPads, TVs, computers. That's where 54% of silver goes to, is on the industrial side of things. That's why I don't have these massive targets. And if you look at commitment of traders, who are the people that are short silver right now? The producers. So that means that as prices go up, they are going to sell a little bit more to forward their productions. They're concerned about the economy and things like that, profitability. It's not a massive, my view would change to $50 if that short position was managed money, large speculators, others, reportables, swap dealers. They need to unwind. Those guys aren't in there. They're done. They're gone. They left after the Ukraine thing when it came down.
So what I'm wondering is why the discrepancy between your gold and silver outlook, because you're not calling for $50 silver, but even 35 is roughly a 50%. I was just doing the math, roughly a 50% increase from today's levels, which is around 23.70. I'm looking at the spot price. Now you're calling for what, 1950 for gold? That would be a reasonable level. That's only an 8% increase. There's a huge, so silver is going to outperform by a significant margin.
I got to tell you, if you look at historically, as they raise rates, those metals actually tend to operate under pressure and then they rise up. That's why I don't have these massive elevated levels. You know, I'd love to come out with the 5,000 hour gold prediction or something like that.
No,
central bank buying, I think central bank buying will, because of the conflicts that we're having, because it seems like many of these countries are butting heads, everyone, China, Russia, Australia, US, and it just seems like everybody's has their own fight going on and their own agenda, that central bank buying on gold, I think, is going to remain elevated. That's why I think gold maybe outperforms silver. The poor man's gold, gets these green shoots. I don't know if $35 is sustainable. I just say that I think that will go up. We might go up into those 30s, into that range. And then at that point, you're going to want to let some go. There are people that are hoarders that I could tell you right now, if you could give somebody all the silver in the world, and if silver went to $50, they still wouldn't sell it. And if it went to $100, they still wouldn't sell it. And when the dynamics in the cycle changes and it comes all the way back down, they're still not going to sell it. It's just the way silver people, they like to hold it. They're collectors. They're not investors. They're collectors.
Okay. But coming back to my question, the silver price, why do you think it's going to significantly outperform gold this year? Especially since silver has an industrial component, keep in mind.
Yeah, it's because of the hard-headed investor is going to go in and it's going to chase that. So you'll see that it'll pull away every time, like that gold silver ratio, when it gets over 90, 95, 100. I've seen it at 120. We start writing articles, we make people aware of it, and then people come in and they start buying it and it goes up. It is a product that people are having a more difficult time getting the physicals, right? So what they do is they are coming into the futures markets. We're seeing more and more participants in there, and that's what they're buying. I do believe that we are going to outperform. I think the metals will outperform gold miners, because gold miners are impacted by these higher wages, higher input costs, higher borrowing costs. And I already read that many of those miners are going to cut their dividends. So, you'll get some volatility in there, and percentage change, you'll get some good moves. But I think
that's huge, because usually in a traditional bull market, if the metals go up, the miners outperform. But this year you're saying do the opposite. I don't
think so on the large scale miners. Remember, you could get a bunch of people, chasing I am gold or one of these $2-3 ones, and they look at it as a long-term call option. It gets one pop on the metals. And then they liquidate to the door. So it's a bit different dynamics. If you look at from a business structure, I don't think the businesses themselves do as well tracking, the precious metals due to their higher input costs.
And all right, and plays on gold and silver. What kind of trades are you putting on into the new year?
So on silver, we do have, so seasonally, gold and silver have gone up about 14 out of the last 15 years, buying it right around now, just before Christmas. And then you sell them out, in February and January, late January on gold, late February on silver. Silver tends And I could show you this study that it tends to peak in February and it sells off into June for whatever seasonality that occurs. And we could see that similar pattern continue to go. I'll put in an article a 15-year seasonal analysis on it, and everyone could see it for themselves. The price doesn't lie, just the narrative does. So, I believe prices are going to go up, but I would definitely be cautious past February being long something like gold and silver, wait for that last interest rate hike, and then re-enter those positions to the long side.
Just out of curiosity, do you ever hedge your silver and gold positions?
Oh, that's something that somebody who has, if somebody had, say, 5,000 ounces of silver, it shoots up to $35 an ounce. You could easily sell a futures contract short, and then you would have hedged that position. You could also buy put options on there as well, short dated ones coming up around key economic data points. Like what if Jerome Powell does actually do another 75 or really comes out hawkish? Coming into those meetings, you could easily buy, a put option with 1 week or less.
Let's move on to energy now. Oil has been one of your best calls this week, you and Bill Baruch. So I know you guys love energy, but the oil price has been coming down over the last couple of months. What's next?
I was going to do a study on those flows of the SPR. So as they're releasing from the SPR, is that too great of a headwind for the price of oil to be able to hold up? And is that why we've been selling off this whole time and correcting? And now that the administration has flipped and says, hey, we are going to start building back the SPR, is that cyclical bottom and we start going back up? So that's something to look at. I do believe that OPEC is going to try and control prices, bring prices up into those mid 80s to low 90s, because that's how those countries balance their budgets. So I really don't see extremely low crude oil prices or even the products if we get a rebound in the economy.
Well, $80 is currently what the WTI is trading at right now, and actually what Brent is trading around as well. So that's not much of a huge change. Do you think a sustained level above $80 is going to impact inflation significantly, or not much?
It'll keep holding inflation up. Like when you look at those like CPI, PPI, and like the core stuff, we bounced around 2% for so long. Now we've shot up to 5. I think 3.5% to 5% is like kind of the new norm. I think that the Fed is really fooling themselves that they're going to be able to get it back down to historical 2%. They want it to be, and it sounds, fine and dandy, but the reality is that I don't think that they'll get it.
All right, great. So finally, give us some stock sectors that you like and dislike.
Well, anytime you go into like things like recessionary environment, you have to get defensive. You've got to look at things. And I mean, I'm not here to pick stocks for you, but you got to look at, when I was coming in all week, hey, the McDonald's was always packed. Down in Florida, Walmart's always packed. People need to be able to afford things, especially when there's no easy money. You've got tightening borrowing costs, elevated inflation. You've really got to get defensive. So I like those types of plays. I don't see consumer, like technology and things like that. People just aren't, they've already bought all that stuff. They're not doing it. I think the real estate market's going to be really tough. Yeah. I think healthcare will do quite well. So there's quite a few plays out there, but you got to stick with the cycle. Now, once we do bottom in March, I think that's when you're going to want to cast more of a wider net, get more broad base, look at some of those, big tech companies, your Apple, your Microsoft, your all those guys. I don't know about Tesla. It seems kind of dicey at this point as well. So that's one everyone asks about.
All right. Yeah, Tesla's facing some stiffer competition now. Everybody's making EVs. It's Audis, Mercedes, BMWs, a lot of great car companies making great EVs. So they're no longer the king on the street. But great thoughts, Phil. Really appreciate your insights. Appreciate all the work you've done for us this year. And happy holidays to you and your family.
Happy holidays to you. I love Kitco. I love all you guys over there. So have a great year, and I can't wait to take on another one.
And thank you for watching Kitco News. I'm David Lin. Stay tuned for more. Happy holidays to you as well. And don't forget to subscribe to our YouTube channel.